Hello traders, the title of this video is Banks and Financial Stocks Technical Analysis Tips and Tricks. Alright. After spending nearly a decade wallowing in ultra-low interest rates, JP Morgan Chase, Bank of America, Wells Fargo, and the banking sector as a whole got a boost from Federal Reserve rate hikes and Donald Trump's win in November. A faster pace of tightening is expected, as well as a rollback of post-financial crisis regulations, potentially adding momentum to lenders. Alright. In this video tutorial, we will be analyzing JP Morgan Chase stock, Bank of America stock, Wells Fargo stock, Goldman Sachs stock, Morgan Stanley stock, and Citigroup stock. Those are financial stocks. We'll be looking at it, talking about technical trading, technical analysis. I need to remind traders that this video is for educational purposes only. It's neither a solicitation or an offer to buy or sell a financial stock mentioned in this tutorial. All right. Reading from the investors.com, this article, it says that but challenges remain as much anticipated tax reform looks less ambitious and cracks worsen in certain consumer markets such as auto loans, buying cars. All right. Meanwhile, international politics, volatility such as fallout from Brexit, Brexit, the backlash against trade could lift activity at activity at banks like JP Morgan, Goldman Sachs, Morgan Stanley. All right. So from this article, we can deduce that political volatility such as fallout from Brexit and the backlash against the trade could lift activity of Goldman Sachs, JP Morgan, Morgan Stanley. But lending at banks with more international exposure, like Citigroup, could see headwinds. I will be putting a link for this article from investor.com in the description section, so you may check it out. The title of that article is Banks and Financial Stock, Latest News and Analysis. Now let's begin our technical analysis. So the first candidate is the Goldman Sachs on the monthly chart. According to investor.com, he will benefit from the lift. He will have a bit of lift from the Brexit and the backlash, that will come from it. Backlash against trade could lift activity at banks like JP Morgan, Goldman Sachs, Morgan Stanley, and so on. So good news for JP Morgan, good news for Goldman Sachs, good news for Morgan Stanley. A bit of headwinds expected from Citigroup, according to investors.com. So now let's look at the chart. So you read something, you find an article, you read about financial stock, banks. This is what is expected, this is what is said. Now we are trading the price itself, the number one indicator. Talking about technical analysis, what should one expect from Goldman Sachs? By the way, if you are recording videos about banks and financial stock, you need to be very careful. This is a word of advice for traders. If they are not bullish, don't say anything. If they are bullish, then talk about it. You don't want anybody to chase you. In the street, you want to sleep nicely. So looking at JP Morgan without too much blah blah blah, the price has exhibited a double bottom chart pattern. You can see here there was a double bottom chart pattern followed by a higher low. Somebody is using my system. Now we talked about this before to TSCW24 trader, that the first higher low after a double bottom chart pattern is what? Is a high probability trading setup. One will use a top-down trading method, multiple time frame trading method, to trade it like a pro. Look what has happened here. A double bottom followed by higher low on the quarterly chart, Position trader, those are position trader, they use the quarterly chart. Okay, they use a top-down trading method. They will use quarterly chart, all right, 3-day chart for the signal, and they will enter the trade on a 3 hours time frame. Or they will use the quarterly chart for the trading setup. They will use okay, all right, the weekly chart for the signal, and they will use the 4-hour time frame for the entry. So you may say to me, George, I'm a day trader, I'm a swing trader, I don't care about your mumbo jumbo position trading. But I encourage you to stay with us because we can apply the same strategy. So you see here, this is you see where I put the red spot. This is a hot spot trading zone. I'm going to minimize my hot spot trading zone, a higher low followed by a double bottom followed by a higher low on a quarterly chart. How you as a day trader can use this. So you can quickly go from that. You see where I put the red spot, the blue line. Now you can switch quickly. You can go, okay, I don't want to see the quarterly chart. Go to the 4-hour time frame. Okay, go to the 4-hour time frame. You see, here we are on the 4-hour time frame. You see what has happened near that okay, red spot on the quarterly chart. They set up for the higher quarterly chart. You as a day trader, now you switch your 4-hour Western frame. You can see a beautiful, gorgeous, all right, here it is, a beautiful, gorgeous inverted head and shoulder chart pattern in the vicinity of that red spot. I'm here. This is what we are talking about, okay? So don't be afraid of the quarterly chart. You can look for trading setup on a quarterly chart and then drop it down to any time frame that is more reasonable to you. That's an inverted head and shoulder chart pattern at that point in time. You see, now you see it on the 4-hour time frame. And from there you want to day trade? Yeah, day trade, you see. And then you pull back again. Now again, this is another high probability trading setup on the 4-hour time frame. Look carefully. This is now an inverted head and shoulder chart pattern followed by a higher low. Another invitation to buy on the 4-hour time frame. So if you have a higher low and you have another higher low, it's another invitation to buy. Here it is, just giving you more invitation to buy. But this is what we are talking about. The origin of the trade, the source of that trading setup on the 4-hour time frame is from the quarterly chart. Position trader took position here at the zone. Now you see the pattern on your 4-hour time frame. Catch the move. Here it is going up. It's following, just giving higher lows, higher high, higher lows, higher high, higher lows, higher highs. Now you see now. This is what we are talking about, okay? From the quarterly chart, you can drop it down straight away. So going back to the JP Morgan on the quarterly chart, so don't be afraid of the higher time frame, okay? Here it is higher low, it was bullish. Now it start going up, okay? People responded here, but it's few. But I believe there are more to this talk because there's also a consolidation in a gently rising red channel. Can you see that gently rising red channel? Yes, you can see now. Using market geometry, if we measure the width of that red channel, project it out, okay, the ultimate greedy target is now here, okay, ultimate greedy target for Goldman Sachs is near this, okay, trailer here. This is about long-term, not medium-term, long-term target above, okay, well above $300 zone, somewhere near, okay, above in the vicinity in the zone of $300, all right? Long-term target in the zone of $300 for JP Morgan. So because a double bottom followed by higher low. Now it breaks above this high here. So watch it. It will be reasonable for it to pull back gently to retest that zone or even to retest the red line here. All right. But if you are analyzing Goldman Sachs, what do you need to do? You need to pay attention to the S&P 500. Never analyze one stock by itself and forget about the market. It's a huge day swing trading, position trading mistake. Don't do that. Right? Always analyze the S&P 500. It's now confined in a triangle that will determine which portfolio we should be focusing on. All right. So if S&P 500 is bearish, we will use our bearish watch list. S&P 500 is bullish, we will use our bullish watch list. Don't just buy and sell and ignore the market itself. So greedy target, long-term greedy target for Goldman Sachs above the 300 zone all the way to 330 zone, all right? But right now, all right, There is this red channel. So minimum target, I think it's already hit. It's near the median line of the top channel. That's the top channel here. And this is the median line here. All right. Normal condition, you prefer to pull back. If you pull back, once you check the S&P 500, if you forget that, it's not good, okay? And then top down trading method again, or another higher low, and you take it out, watch the resistance level. So for Goldman Sachs, it looks good because it starts showing what we call, okay, a bullish step, all right? It's like a downswing, all right? Double bottom, higher low. That's a bullish step, okay? All right? So to go a little bit deeper, one will go also to Google Finance, perform Google Asset test, which I believe it should pass with flying colors, all right? And then, all right, look, okay, more deeper into the balance sheet, okay? Check the economy news relating to Goldman Sachs, and don't use the technical analysis alone. But talking about investor.com, all right, okay, the Brexit, okay, and the backlash from a trade, okay, will provide, okay, excellent good news for Goldman Sachs, JP Morgan, Morgan Stanley, all right? So this is about Goldman Sachs. I'm going to go quickly now to JP Morgan. JP Morgan. JP Morgan Chase, the #1 banker in the world. So here we are, we have JP Morgan flying away, running fast. But there is something I need to tell today. There's a warning, you see here. You see here, the price went down, and then break above, retest here. Pure, here it is. Here, look at this one. Breaks above, and retest. And from here, it just went 1, 2, 3. Yes or no? And hit this level here. So by using this move out, so breaks above, retest, this move out, this width, all right, we project it now here, this low here, project it here. Right? So that's another one. It's a breakable, retest. Went up, pull back. So we do exactly the same thing. Here you see the winnable, retest. Okay? Here it's a triangle. Okay? Went up from a triangle. Now we put it here near the low. I need to remind traders that are trading JP Morgan, though they say there are more upside from JP Morgan. Technically speaking, JP Morgan is now at a price target level. Using this okay width here, we are at a convergence point. If one wants to be bullish, one should allow the price to go above the level of $88. $88. That's a beautiful number. 8811. 8811. 8811. Now you see, you can never forget that number. Okay, JP Morgan, priority to bullish signal above 8811, and priority to bearish signal below that level. Remember, this video is for educational purposes only. It's neither an invitation to buy or sell JP Morgan. We are doing what we call technical analysis, showing traders how they can use this chart to make a trading decision. Now it's down to traders to make their own decision. What I'm doing here, I'm expressing my own opinion. All right. Okay, so watch out for that level. Because it's now at the target. Probably, if you were here, that would be good news. Okay, so you will catch it. Again, you can see that JP Morgan was also exhibiting that bullish dance. Double bottom here, followed by what? A higher low. I think normally I should charge you for telling you that information. Double bottom, because TST traders, okay, double bottom followed by higher low is a higher probability to sit down. It's an invitation to buy. One will use a top-down trading method to trade it, and boom, target is hit. Now people are coming out. So gently in this zone is a resistance zone. See this tall candle. This is market pushing the price to meet the target. They don't want anybody to delay it, because you see some people were selling here. You see there was a resistance here, which is normal. So those who bought it here, okay, was quite good to come out, gently come out. But as the price tries to go up, they don't want it to slow down again. You see, the small money, okay, the big, okay, the professional trader don't want anybody to waste their time. They say, look, guys, don't stop it. There are more to come. Phew! So here we are at the target price level, convergence point. If you want to know more about convergence zone, convergence trading, go to www.stochastic-macd.com. All right, so it's at the target price level, JP Morgan. Next financial instrument that we want to look at, we look at okay, Morgan Stanley, another financial stock belonging to the banking sector. All right, here we are again. This is Morgan Stanley Epic MS. All right, so JP Morgan, the Epic is JPM. Goldman Sachs, the Epic is GS. Now we are looking at Morgan Stanley, Epic MS, all Americans financial institution, okay, belonging to the banking sector, financial stock, okay. So looking at the Morgan Stanley, again, look at that. So the article written by investor.com is making sense because they say the Brexit and the backlash from trade will be good news for JP Morgan, Morgan Stanley, and Goldman Sachs. And all they are showing here, another bullish step, double bottom, followed by what? A higher low. What is that? Okay. Let me write something down for myself. Okay. A double bottom followed by a higher low is a high probability, okay, trading setup, okay. In fact, the market stable data that one should formulate here is that a bullish, okay, chart pattern followed by a higher low is a high probability trading setup. A bearish trading setup followed by a lower high is a high probability bearish trading setup. And one more time, you can see that Morgan Stanley, see, form a double bottom chart pattern, then display a higher low, an invitation to buy. The good news for traders that are salivating, okay, like Pavlov dog, to buy, okay, Morgan Stanley, I think there are more for Morgan Stanley. I would say a long-term target for Morgan Stanley should be set at $96.91. Uh-oh. This is not an invitation to buy and hold Morgan Stanley, by the way. I'm doing what we call technical analysis, okay? So if you're an investor, I'm not telling you to buy Morgan Stanley. I'm doing technical analysis. So you can see a price went up, pulled back, okay? And then it ran fast to the top. We use the height of that price action, and then we project it again here. So it did the same thing, went up, pulled back, and we use the same measuring stick, setting the target at $96.91. Will it reach that level? Maybe. Maybe not. All right. But as we are talking about something looking bullish, all right, on YouTube for educational purposes, of course, all right. If you want to put real money into something like this, myself personally, what I will do, I'll go to Google Finance, check the balance sheet, check the cash flow, read the news, see the story, what's going on. One of the stories is about investor.com, I'll tell you now, all right, okay. And at the end of the day, as a technical trader, which I've been saying all the time, so you may get upset with me, but because it's so important, that's why I repeat it 100 times, one cannot trade any stock by itself. One should trade first the S&P 500, which is now stuck in a triangle. That's it. So looking bullish, but S&P 500 first, and greedy target set at 96.91. Long-term target, that's a long-term target. If the market breaks above that triangle, the S&P 500, and finds support, that will be a huge boost for many stocks. We will see how that plays, but at this junction, personally, in my opinion, I will be very, very cautious to be madly bullish. All right? Okay, so this is about Morgan Stanley, looking good for Morgan Stanley. Double bottom, high low. Now, it would be nice for it to pull back a bit. Yeah, there's a resistance here. So day traders, swing traders to retest the zone of $39, call it $40 zone, to retest the $40 zone. Okay, it's coming back a bit. And then we see it whether we will have day trading or swing trading setup, okay, in the zone of, see the $40. So it would be nice for it to come a little bit more to retest that level and then take it up and see whether it's going to find the support there, all right? And if, like now, I'm on the, hold on please, traders. Now that I'm on the daily chart, okay, we need to draw the trend lines, you see. See, there's a trend line here, you see. Collecting this point, there's a bit of trend line there. And just be aware of that trend line, okay, if it's pulling back, okay, on the daily chart. But technically speaking, it's looking good for Goldman Sachs, for JP Morgan, and also for Morgan Stanley. Okay, but at the end of the day, one should trade first. Okay, the S&P 500, check the economy news, and apply, okay, a top-down trading method. All right, this is about Morgan Stanley, EPIC, MS, belonging to the financial services sector, capital market. The next financial instrument that we're going to look at is Wells Fargo. I like that name, Wells Fargo. The EPIC is WFC, Whiskey Foxtrot Charlie. Here it is on a quarterly chart. For Wells Fargo, all right, one more time, this is for educational purposes only, all right. So again, you can see it went up and then pulled back here. I'm using the same, okay, rules. It went up, pulled back here, nicely retesting the moving average 14 on the dot. They responded and push it up. Stock went up almost to the zone here, $38, you remember, and then went up fast. All right. If I apply the same rule and I project that line here, you can see that that stock is now like JP Morgan at a conversion point. If one wants to be truly bullish, one should allow Wells Fargo to break above the level of $56.94, call it $57, and to validate that level as support level. And then one can apply a top-down trading method to take it up. All right. If you breaks above that level, you can set another target like this. You see, run, pull back, we project it again, and we can set a long-term target for Wells Fargo in the zone of $75.93, call it $76, provided, repeat, provided that, all right, it found a support above the $56.94. So at this junction, looking at the chart right now, personally, in my opinion, not telling you what to do, all right, prior to bullish signal above $57 and prior to bearish signal below that level, because we are at the conversion point, one step at a time. Okay, I can do something else to give you another target level. This time I may use the Fibonacci extension applied to the last bullish price action, and you can see it's the 138.2% Fibonacci extension level, which is quite close to the zone of $75. So the 138 is in the zone of $73 zone, but the target I was quoting to you is here, 75. Okay, that zone. Okay, so be aware of 73 is a resistance also there before the target that I quote to you earlier on. Okay, all right. Okay, so we are stuck now at the resistance level at $57. All right. Possibility, if it breaks above $57, find a support, watch the level of $76. But before the $76, remember the 138.2% Fibonacci extension level apply to this price action in this section here. This is about Wells Fargo stock at a conversion point. Though, okay, according to investors.com, there are more good news for Wells Fargo, JP Morgan, Goldman Sachs, all right, and the Bank of America. Let's bring on now the Bank of America. Have I already checked the Bank of America? I like the Bank of America very much, okay. Here we are, Bank of America. I don't have any connection with Bank of America, by the way, but looking at the Bank of America, is looking very interesting to me. Not only that the stock is quite at a reasonable price now, $22.68. That's where it is now. It's quite reasonable. Again, exhibiting a bullish, all right, setup, bullish signal, okay, bullish step. What is that bullish step? Double bottom or bullish chart pattern followed by a higher low. What is what? It's a high probability trading setup. One will use a top-down trading method to trade it like a pro. One more time, using the price target, as you can see here, the stock, you can see it went up like this, okay, and then pull back to retest the moving at 14, okay, and then from there it just ran up fast, yes or no. Now we see another scenario here. We have a double bottom chart pattern. Now it pull back a bit like this, all right. We can say if those who bought it here join this group and are also madly bullish as they were here, talking about probability, not guarantee, not certainty, that there is a chance in the long term, all right, in the long term, maybe in 1 year, maybe in 2 years, maybe in 5 years, that slowly but gradually, the Bank of America may hit the level of 46, repeat, $46.32, call it $46 zone now, all right? Even try to hit the 50 zone. I believe if they bring it to 46 zone, they will try to touch the 50 because the market like the round numbers. So they will say, why 46? Let's push it to $50. All right? We don't want to stop at $46. We will push it to 50. So remember that the market uses round numbers. So sometimes you want to sell. If you see that it's 46, you may set your limit order at 50. You'll be amazed. They will push it exactly to the round number where they will sell it on the dot. All right? So market like the round number. You see this one is quite close to 5500. You see this one here? Okay. Top here is almost, I'm talking about my cursor, near the 5500 zone. All right? They like the round numbers, so be aware of that, okay? So for Bank of America, I like it very much. I might as well look for an opportunity to buy this and hold. I'm not telling people to go and buy a Bank of America. This video is for educational purposes. So we have looked at the financial stocks, JP Morgan, Bank of America, Wells Fargo, Goldman Sachs, Morgan Stanley. There's only one more left, okay, which is, so right now for Bank of America, technically speaking, for day trading, swing trading purposes, we will prefer it gently, without too much mess. Gently, my friend, drop it down nicely onto $21.18 zone. That's the line there. And gently, slowly, but gradually push it up. One more time, I will say it again because it's so important. Traders tend to forget that one cannot analyze one financial stock by itself. One should trade first the S&P 500 and align trading and investing strategy with the market environment. All right. So everything we are saying is all okay under the umbrella of trading first the S&P 500, which is the market. All right, very, very, very important because a lot of fundamental traders tend to ignore the trading triangle, but it's all about the season, the right time and the right place, and market timing. And the most sophisticated market participant pay attention to the market timing and at which price they are buying the stock. They do not buy at any price, and they take into consideration the market timing. Professional day traders, swing trader, position trader always use a top-down trading method. The reason why some market participants hate me so much because I've been busy talking about a top-down trading method openly in the public place, and some professional traders do not like that when I'm talking about position trader, how they trade, swing trader, how they use the top-down trading method. I've been looking for that information many years on YouTube. I have not found one until I have found it myself, and I start sharing it for free on YouTube. All right, so very, very important point. If you want to be a serious market participant. So this is about JP Morgan. Now, according to the article, they say that banks that are only how should I put this to you? Businesses that rely on lending will have more headwinds. So, but investment banking like Goldman Sachs, JP Morgan, Morgan Stanley, Bank of America, they are more likely, to profit from the Brexit and the backlash from trade. And here they say that, not me, all right, they said that lending at banks with more international exposure, so they're talking about Citigroup, it's all over the world, Citigroup, the EPIC is C, just one letter C for Charlie. That's the AP for Citigroup, another American financial stock. Could see headwinds, a bit of challenges. But now, if they can manage to handle those headwinds, well, they will benefit from it, yes or no? So they can see those challenges as opportunities and manage them carefully and profit from them. And you can see that the stock is being quite oversold. There was a trend up to 2000. You can see here 2000. And then we have the tech bubble, and then there was this first reaction. You see, this is a correction, flat correction, 1, 2, 3, and another 1, 2, 3, which is a double retracement. This is a good stock to look at later on. All right, and then from there we have a move down, 1, 2, 3, 4, 5. It's quite hidden here, 1, 2, 3, 4, 5. This is an expanded flat correction. A little bit expanded, all right, a little bit expanded all the way down here. So now the question is, if you see like this, the stock, Citigroup, is also interesting to us because talking about in my opinion, all right, it returned to the cycle point. This is the cycle point, the beginning of the trend. We are now at the beginning of the trend. Do you believe that there is a future, a brighter future for Citigroup? If yes, then you need to focus now on market timing and which price are you willing to buy Citigroup. Now, according to investor.com, all right, lending at bank with more international exposure like Citigroup could see headwinds. What do you make of that? What is your risk tolerance? All right. What type of investor are you? All right. So those are the things you need to take into consideration, and then from there you take it from there. All right. Are you thinking to buy a whole? And what price is the best price to buy Citigroup and buy a whole? A whole very often. So if you want to set a target as things stand now after this move down, very simple target that a lot of analysts will set will be to set a target at the 50% Fibonacci retracement level of this move down. See this move down? Right? We will set a target there for Citigroup. That's a long-term target of almost $300. Okay, $300 zone. All right. That's a very, very long-term target. All right. All right. Okay. The price now at $58.69. Okay, $58.69. That's the price now. All right. So a consolidation may be in place. There's a small consolidation here. All right, for technical traders. Yes, I'll put it there. I'll put it near the opening price of this candlestick bar here. Okay, I'll put it there. In fact, what I will do, I'll put a horizontal line there. The closing price of that candle here. So watch out for the level of $67. There is a resistance at $67. All right. I'm going to decline this message. So, all right. So, my apologies to traders because my phone is next to me. I need it because that's where I'm reading the article from. So, my apology for that. All right. So, there is a resistance $67. So, it's a consolidation now. Okay, between a level of $18 and $67. So, will it break above that $67 and find its support? All right. And then talking about long term, will it one day reach that zone? That remains to be seen. But right now, looking at the consolidation, the midpoint target, the median line is in the zone of $45. So remember, we are now in consolidation, and there is a resistance ahead at the $67, call it $68 zone. All right. So for for Citigroup, the challenge is to break that resistance at $68. That will Then we will see whether it's going to find a support above the $68 zone. So right now, technical traders will be looking for opportunity to sell, Citigroup near the $68 zone because of the consolidation, and some traders will also look for an opportunity to buy it near the $45. So if they want to buy near the $45 zone, they will prefer it to be going up from the $18 zone, and then when it hits the $45 zone, there will be more buyers pushing it to $68. But if it's going down from the $68 and it come near the $45, people will be giving priority to bearish signal below the $45. They will be trying to push it back down to the $18. The question is, who will win? Will the bearish trader win, or will the bullish trader will win? Personally, my friend, because this stock, people were selling it for a year. You can see that it went down big down from the level of almost $600. It's now in the zone of $58. I will leave it alone because I don't want to be the last bearish trader try to kill a stock that is already on the ground, so to speak. Because the reason why you don't want to do that at all, personally speaking, is that stock going down at this big company like this, all right, they still have value in them, all right, they still have value. So there will be some investor there trying to buy this and hold, even some hedge fund doing exactly that. You want to check the balance sheet of Citigroup, okay, check the news, all right, do your due diligence and see whether do you still believe that you should be selling this stock like it was going down before? Personally, I won't be part of that bearish party at all. I'll be waiting if I want to buy, look for a clear-cut bullish signal, okay, to buy the stock instead of trying to force it down. Though, according to the investor.com, all right, key, all right, lending at banks with more international exposure like Citigroup could see headwinds. All right, so this is the end of this tutorial talking about banks and financial stocks, technical analysis, tips and tricks. If you have any question or suggestion, put in the comment section, and of course, I will be recording another video to answer your specific question. To summarize the video, we were looking at JP Morgan, Bank of America, Wells Fargo, Goldman Sachs, Morgan Stanley. And according to investor.com, due to the Brexit and backlash from trade, those financial stocks are more likely to have more upside. But headwinds are ahead for a Citigroup that has more international exposure. At the end of the day, this video is it's not an invitation to buy or sell any of those financial stocks. It's for educational purposes only. One should use a top-down trading method and perform Google Assist tests without ignoring market timing and buy in at a specific price. We also talk about a double bottom followed by higher low. Is a higher probability trading setup, as you can see for JP Morgan, Bank of America, Wells Fargo, Goldman Sachs and Morgan Stanley. The stock has exhibited a double bottom followed by higher low. There are price targets set. Those price targets are long-term price targets. One should never analyze a stock by itself. One should always analyze a stock in the light of the market, which is the S&P 500. Happy trading to you all, and speak to you soon. We are the TSTW24 traders talking about banks and financial stocks, technical analysis, tips and tricks.